Hey folks, my name is Mo Amir and this is VANCOLOUR, British Columbia's bona fide culture and politics TV talk show right here on Check and Check Plus. We're also on Apple Podcasts, Spotify, and YouTube. Tonight, put on a pot of chamomile because BC broadcasting legend Tamara Taggart is going to be here for a spot of tea. But first, inflation has made everything more expensive. But rising interest rates to counter inflation has increased the cost of carrying debt at a time when Canadians are carrying more debt than ever. Our first guest tonight will explain what this all means for you. She is a reporter for the Financial Post, one of the best in the business in breaking down the money matters in our country. She is Stephanie Hughes. Stephanie, welcome back to the show.
Thanks for having me, Mo.
Absolutely. So anyone who goes to the grocery store is well aware of inflation. You can see the cost of food rising at the fastest pace in 4 decades, but the Bank of Canada's solution to inflation, hiking up interest rates, means that Canadians on variable rate mortgages, and there are many of them, are suddenly paying more to finance the purchase of their home. In fact, taking on any debt is more expensive than it was last year, and Canadians are carrying a record amount of debt. On top of that, increased interest rates also affect the borrowing costs for businesses, which may also slow down the economy into a recession, which would mean job losses. So the cost of goods are way up, but the Bank of Canada's solution makes Canadians vulnerable to a recession and increases the costs of Canadians holding record amounts of debt. Give it to me straight. How screwed are Canadians right now?
Well, to be completely honest with you, I think a lot of Canadians are feeling a bit screwed right now. While we've got inflation running at its hottest pace in decades, at the same time, like as you pointed out, interest rates are rising to their highest level since the global financial crisis. So yeah, Canadians are getting hit with a double whammy of price hikes right now. While the pace of inflation decelerated 2 months in a row to 7% in August, it still leaves the rate a lot higher than Bank of Canada's 2% target. Canadians are feeling the pinch, especially if they don't have that income buffer to kind of weather these price hikes. We're particularly seeing it with food costs, as you mentioned. Price of food products rose at a 10.8% year-over-year pace, which was the fastest since 1981. And it's pushing more Canadians to food banks. I read an article the other day kind of seeing that some food banks are reportedly seeing something like a 10% increase in usage every month. And it kind of makes sense. Food has no substitute. So there's not a lot of more affordable options, and shelter is another one that, rising home ownership costs, as you pointed out, have Canadians flocking to the rental market. So that's putting more upward pressures on monthly rents. So shelter costs, food costs, and it means Canadians have to put a greater portion of their paycheck towards servicing these costs. So it means they're not spending as much going out to restaurants. The discretionary spending is just not there. So yeah, it's a pullback in demand, and it's what the Bank of Canada has said it kind of hinted at wanting to see, so that supply could catch up. But I do think there's a bit of a light at the end of the tunnel here, where many Canadians, not all Canadians, mind you, were able to build up a savings buffer. The banks estimate this buffer to be about $300 billion. And the Bank of Canada is trying to assure Canadians that this decade's high inflation might not be won't be the norm. And they're working on getting it back to 2%. But it's difficult to get that inflation down, and it's looking like it's not going to happen without some sort of recession. A lot of economists are kind of expecting that at this point. So yeah, there's a lot of pain going around these days, Mo.
So I heard the term soft landing being bandied about quite a bit. And those same people that were talking about a soft landing are not using that terminology anymore. So what is that, and why aren't they talking about that anymore?
That's a good point. So a soft economic landing would be a way to kind of get out of this high inflation situation without a sustained economic downturn. So not a lot of quarters of just this deep market rout. So they were hoping for a soft landing. But one thing I've noticed in the latest rate decision is that the actual statement that accompanied the 75 basis point hike that we saw in September did not mention soft landing, nor did the speech the following day from Senior Deputy Governor Carolyn Rogers. So it's something, and economists kind of caught on to this. They said, maybe the Bank of Canada has to drop the facade of being able to stick this soft economic landing, because it's not looking like it's very likely right now. And you see other central bankers, it's not just a Bank of Canada, but since we're in Canada, that's what we're talking about for the most part. But other central bankers have suggested they're willing to trade off economic growth to put a lid on decades high inflation. So it's almost like the way to handle inflation at this point is to sort of engineer a recession, though I don't know if we've had a lot of central bankers come out and say that, but it's looking like they've been honest at saying the soft landing looks like it's going to be a lot more difficult to reach.
So it sounds like we're in store for a hard landing, which sounds terrible. When does this stop? How does it stop?
Well, it stops when we get inflation back down to a more manageable level. First of all, bank economists aren't expecting inflation to level off for a while. TD Economics, I read a report earlier this month that said that they expect inflation pressures to ease to 2.6% year over year by the end of 2023. So if viewers are hoping for a fast fix here, they're not really going to see one anytime soon, unfortunately. But economists are also expecting a recession. So over the summer, RBC Economics said it was predicting the country will hit a moderate and short-lived recession in 2023. The fact that there's a recession is obviously bad news, but hopefully short-lived is hopefully it's short. So when does it end? I'm no economist, but maybe around 2024, 2025. Maybe some of those pressures will persist. Maybe it'll take longer than that. Who knows? But so you have to understand, we've got deep problems here. We've got high weather impacts impacting crop growth. Russian invasion into Ukraine impacting supply chains, COVID-19 lockdowns in China also impacting supply. So it's going to take a while to unwind some of these pressures. So long story short, get inflation down, come out of the other end of this assumed recession in one piece, and I think that's when the pain stops, hopefully.
So speaking of the pain and the short-term outlook, we're at the end of September here with less than 90 days until Christmas. Can you believe that? How does this affect holiday shopping or just the holidays in general compared to normal economic conditions?
For sure. Well, I'm expecting Canadians are going to be more budget conscious heading into the holidays. I know I certainly will be. Thanksgiving dinner is going to be more expensive than Canadians are used to. Consumer products will be pricier come Christmas time. We're going to have a rough go of things for a while. But remember, the Bank of Canada said it was aiming to pull back demand. So demand, especially after the pandemic restrictions lifted, was up to here is up to here. And supply is just kind of like dragging along right here. So they want to pull down demand with these rate hikes so that supply has a chance to catch up. So it's not going to be fixed during Christmas time. And to compare that to normal economic conditions, obviously we'd see Canadians spending more on gifts, get-togethers, maybe they travel to go see family or just take a holiday vacation there. But all these things that we're used to under normal economic conditions are going to be more expensive. So one thing I'm concerned about is that Christmas is a high earning season for a lot of businesses, and they're definitely going to notice a drop off if people tighten the purse strings here. And it's possible that they might even plan their inventory accordingly. But definitely going to see a hit if people are trying to spend less at this time.
Well, hey, Stephanie, I appreciate you parsing through these very complicated matters in what are very uncertain economic times. Thank you so much for beaming into the show tonight.
Well, thanks for having me.
Absolutely. Folks, she is a reporter for the Financial Post, one of the best to keep you informed on all things finance related in this country. She is Stephanie Hughes. Now stick around, because after some business, I'm going to put on a pot of tea because my friend, broadcasting legend Tamara Taggart, will return to the show. We're going to talk about gray hair while we reflect on last month's unexpected dismissal of Lisa LaFlamme from the CTV National News Desk. That's up next. I'm Mo Amir. This is VANCOLOUR.